Today's discussion involves proper, sound finance, honest banking, and life insurance. I've noticed something during my lifetime. Stupid ideas, something for nothing ideas, spread quickly through the public and are quickly adopted without thought, and people lose. The truth is that 95 out of every 100 Americans, no matter how lovely they are as people, fail financially, 95 out of 100. They follow one another into these foolish ideas, or ideas that sound good, that are heavily promoted by industry or government or somebody, but don't work. It's only the 5% who think for themselves, make their own decisions according to their personal goals and their personal strategies, who succeed. When they take a different path than the other 95%, they're often criticized when they start on that path. And they're often envied or hated when they succeed and everybody else fails. But there's a very strong psychological component in all this. It's easier to do what everybody else is doing, so when you fail with everybody else, nobody will criticize or blame you at all. It's a very difficult thing to stand up and do the right thing and to succeed, but it's highly rewarding. Now, we're dealing with fiat currency in our country right now, but that's all we have and all we can legitimately use to accomplish a number of things. Number one, it's so important to have money available to handle emergencies and to take advantage of opportunities. There's no value in gambling the money to try and get ahead of inflation until we have enough money to do so and to cover emergencies if they happen. One of the most effective fundamental things a person can do is to open up what I call a concept of a bank on yourself. It's the use of honest banking, but there are no honest banks now. I've described how they take money and multiply it by at least 10 and create inflation and gamble. And the gambles are huge. And the banking system will fail. There may be individual banks that survive, but the banking system will fail and create great losses among the American public. The life insurance industry, those companies that are owned by the policyholders, they're called mutual companies, have a 165-year history of never having lost a penny for any individual. That's an impressive thing when you compare it against the fact that approximately every 22 years, the banks have a crisis. The last completed crisis was about 27 years ago or so, when the entire savings and loan industry was eliminated from the face of the earth in a single year. The crisis of 2008 and 9 was substantially greater, and it was papered over by the Federal Reserve creating around $17 trillion in secret on a computer keyboard to paper over the crisis. It's worse now than it was before, and the crash will be greater than it potentially was then. The insurance companies, their sole purpose is to husband the money, keep it safe, make it available to people when they need it. And there are tax benefits that can be built into an insurance contract that protects us from our one greatest potential risk, and that's the tax man. In addition, if things should go badly, there's a death benefit. And many times there are early death benefits. If a person has a serious illness or even needs nursing care, those kinds of things can be built into a contract done correctly. So now a person has a safe place to keep money, the design of which is to keep it safe and fully available and to protect against the possibilities that could go wrong. I don't think most people realize that if people marry young, the probability one of them will die before the age of 65 is very close to 50%. That's destructive to the survivor. It's usually the man who dies, but sometimes the woman. It's very destructive, again, to the survivor and the children when the children exist. So life insurance can be an enormous way to accumulate funds, again, where they're freely available and safe, and to take advantage of opportunities that could never have existed unless they had money to use for appropriate purposes. Term insurance is the rental of a death benefit. It has a definite purpose. It's for people who need a big amount of insurance and have very little amount of money. It's a starting place, and done correctly, it's excellent. I will tell you outright, there are very few uses for universal life. I don't care what kind it is, whether it's a guaranteed interest or whether it's an indexed or variable or whatever it might be. The very construction of those accounts mean they will self-destruct at some point in time, and the expenses and the risks are enormous. The only one that can be used as a safe place to hold money is whole life insurance through a mutual company. There you have a cost for the death benefit, but that's a very beneficial thing to protect the family and to take care of obligations that may exist at the time of a death. But more than that, the money is freely available and growing, and it's a disciplined way of savings, and the institutions are sound. Now, a 165-year record of never having made a loss is not an absolute, but it's far better than anything else that can be done, and the money's quickly available to maneuver quickly when necessary to protect ourselves against losses and to take advantage of opportunities. One of my clients just recently bought completely paid for a building in El Paso with money he put into a bank on yourself kind of contract 8 years ago. And the benefits are just absolutely enormous. People don't understand the value of having money on hand that's safe and available. Some of the benefits of having an account of that type are these. Safety, I've mentioned several times. A respectable return is also available. Recognize the return isn't so important when you realize the money's freely available to take advantage of opportunities as they occur. And that's more important than the return on the account itself, like any savings account. Disciplined savings. There is no record of anyone in this country, in the entire history of the country, who could save $100 a month for a 10-year period without fail in a bank. It's put and take stuff. But they feel the obligation to put the money into an insurance contract, and they do. And millions of people have done so and succeeded by having their basic savings using life insurance as the foundation, using it as an honest bank. Tax protection, I mentioned briefly. There are different tax regulations involving insurance. Insurance companies pay taxes, of course, but there are benefits for having the money safely away from predators, away from potential loss, and away from the tax man to whatever extent a person might want to do that. Accounts like that are nearly bulletproof in court. That's critically important as a way to preserve assets at a time when people are ready to sue one another for almost anything. They may succeed in suing someone and take practically everything they have. In some states, even their house isn't safe. But in nearly every state, insurance contracts are practically bulletproof in a court. It's a very important thing, especially for people who have assets they want to protect. The money is available without question. That's so critically important. Go to a bank, they'll want to know why you want to make a loan, or even why you want to make a withdrawal. I have clients that tell me when they were withdrawing their own money, they were questioned why. When a person uses their own money for financing, they're paying the principal and interest back to themselves if they borrow the money from themselves, and they could even have a tax deduction if the money is borrowed for business or investment purposes. The flexibility under changing circumstances is enormous, and in the event of a death, debts can be covered. People we care about can be protected. And it can be done at a profit instead of paying a monthly or annual fee to rent a death benefit, which is term insurance. Again, term insurance has its place, but it's simply paying a fee to rent death benefit rather than owning it. So that eliminates the probability of dying after the policy dies. The policy will always be there and always pay when you die regardless. And one of the top things, the more people who use a life insurance company and a whole life plan to save and use and utilize their money, the less inflation we will have, because the insurance companies do not create inflation. If you put $1 in an account with an insurance company, they lend that money out to an entity which is perfectly capable of paying back the money plus interest, and they're simply trying to preserve the money and the free use of the money by the policy owner. They don't lend out $10 for every dollar deposited. They only lend out $1, and they don't even do that. They keep a lot of the money on hand for current needs. So it's simply honest banking. Foundationally, starting with honest banking is the smartest thing that 95% of all Americans could do. If they did that, the probability that many, many more Americans would succeed is greatly increased. I hope you'll find that helpful. I've never talked about that issue in any of my discussions to this point, but if people understood the value of saving money on a disciplined basis where it's safe and freely available, honest banking is the foundation for modern civilizations. Starting there, the possibilities explode. They grow like crazy. And I'd be happy to help anyone with those issues once they have enough money to handle the emergencies, and then take advantage of the opportunities as they occur. I hope you find this helpful. Thank you.